Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily interactive webinar filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out.
Hey guys, good morning everybody, and welcome to another edition of the AccessATrader.com weekend update show. I hope everybody is doing okay. Hope everybody's having a great weekend. Sun finally is peeking out here, but then again, it's going to start raining again. The absolute worst weather I think I've seen in a long, long time, especially in the Northeast here. It just absolutely rains every day. So emotionally, I'm a wreck. Good thing the market's actually acting very, very well, and hopefully you guys are doing very, very well. So let's talk about the market. I've always maintained this. Technical analysis is your only lifeline. Okay, I've been saying this all along. So a lot of times when people start trading, and unfortunately because of the whole social media phenomenon, everybody runs to that hot stock or that hot avatar who's feeding you stuff to buy or sell. Okay, but technical analysis through all these years have been phenomenal. Okay, that's the only lifeline. That's the only friend, and I say this all the time. Charts don't lie, okay? They don't lie. Sometimes they don't tell you the truth right away, but they don't lie. Technical analysis is pure, it's organic, and the most important thing, it works. I've also maintained for years that it is so important to collecting data, okay? News on the surface means absolutely nothing. It's how the market receives the news, embraces the news, and then the market trades off the news. For example, a lot of times a company will come out with, on the surface, really good earnings, right? Really good earnings, and then the market will sell it off, right? Sell it off. You've seen this a million times. You've also seen a lot of times that companies come out with really bad earnings, and then the market rally. And a lot of time people sit there and say, well, what happened here? Well, why is the market embracing the news completely opposite the way it's being disseminated? Well, that's what the market is. That's what collection of data is. The news on the surface is irrelevant. It's how the market perceives it and then trades off of it what's most important. And if you look at the indexes for the week, right, completely flat. I mean, you're talking about the NASDAQ, the S&P, and the Dow pretty much flatlining, maybe down 0.5% each. Not a big deal, right? But you have to start looking deeper. You have to dig deeper. And if you've been following me, on social media, even in the last 2 weeks, you see all the warning signs playing out over and over and over again. So let's go back, right? Let's go back and see the importance of collecting data. So if you guys remember the previous week, not last week, the previous week, the Dow was up like 2.5%. You guys remember that? 2.5%. And it looked very, very good that we were breaking the downtrends. Everything was good. And you looked at the QQQs, right? You looked at the QQQs just from a technical point of view, and it confirmed this whole area, right? It confirmed the 50-day moving average, which was bullish. And then the really big green light was once they broke above the 167 level, and remember that number for the next few minutes, once the Qs broke that 167 level, we were off and running, right? We were literally off and running. So you figure the biggest, the most aggressive stocks in the market, right? Who are they? The Googles, the Amazons, right? Googles, the Amazons, the Boeings, right? The Boeings, the Nvidias of the world, the Alibabas of the world, the Netflix, they're all going to be exploding, right? Everything's going to be exploding. And they kind of sort of did, right? And they kind of sort of did. And then we started seeing some weird elements of, well, stocks are not going to be bid up right now for whatever reason. How do I know that? I'll show you in a second. So the week started out, if you look at the previous week, I'm talking about strictly the previous week. If you look at the previous week, right, we had this really good trade on Google. And there's a reason why Google was so important, kind of translating into the Amazon trade. Let me tell you why. So we had this really good trade on Google. Again, very, very basic technical analysis. Here's the 50-day moving average. It got rejected here several times, right? 1065, 1065. Once it broke the 1065, again, the whole theory of the PS60 theory, stocks go from supply to supply and demand to demand. Well, here's supply, right? Confirmed supply, and it went to the next supply zone. So that was good, right? That was good. Caught a really good trade on Google. I don't trade a lot of Google anymore because of how spready and how liquid it is. But this one, this was different. This was a 50-day confirmation. I made a really good exception for all you guys who traded on the option side. Obviously, you really benefited from the option side versus the illiquidity side of the equity, but nevertheless, the stock did what it had to do. Here was where a lot of red flags for me started forming. So keep in mind, NASDAQ breaking out, QQQ's breaking out, Google breaks out, Amazon's been basing, right? Amazon's been basing for the last, forget about all this. This is the afterthought. Amazon's been basing over the 5-day moving average. Looks like it's ready to go. Looks like it's ready to attack the earnings highs. Everything is good, right? Google already exploded. NASDAQ is on its way. Amazon is next, right? So we buy Amazon on this 1606 break, right? 1606 break. And the stock goes up initially about 9 points, 10 points, which was great, which was absolutely great. We took a third off, right? Took a third off. And then the stock for the next 3 days, did absolutely nothing. And keep in mind, the NASDAQ is breaking out, right? The NASDAQ is breaking out. Google is continuing to run, right? Continuing to run. And that's a red flag. Why is that a red flag? Because again, if the biggest company, most sentiment-driven company in the market, maybe for the exception of Apple, because again, Apple's everybody's good feel story. If this thing can't rally, well, what's going on here, right? What's going on here? And what happened was, if you look at the NASDAQ 100, right, with the NASDAQ 100 for the next 3 days, and by the way, I got stopped out of the remaining of my Amazon trade down about $4, right? About $3-4. Okay, no big deal. So we caught a third, up about 9-10 points, sold the balance, down 3-4 points. That's not the big deal. We started seeing then a blow off top on the NASDAQ 100. And this is very, very important. This is when I started. If you look at this week's macro tweets, not the individual trades that I put in on social media from the private for the private Twitter page, just from the macro tweets, you'll see the following. Hey guys, by the way, the NASDAQ just put in an inverted hammer off of supply. Again, here's supply, here's an inverted hammer. What's an inverted hammer? For the most basic Japanese candlestick technical analysis, that is just a short-term reversal. Again, nobody's calling for Armageddon. It's not the end of the world, but all it represents is a short-term reversal back to the downside on a back test for a potential test of the 5 or 10-day moving average coming off highs. And that's it. And again, nobody was talking about it's the end of the earth. We're going down to, QQQs are going down to 100. No, it's just a back test, orderly back test, and see what happens if stocks can reclaim bullish sentiment to go back up. Here is the problem, right? So we talked about that trade and we talked about that macro scenario, and the market nevertheless started building lower, right? Started building lower, and then we gapped down. The good part about that is we put in a hammer, right? We put in a hammer, right? Which is again, the complete opposite of inverted hammer. So this is bearish and this is bullish. So we should have went higher, right? And we did. Here is the problem. For the next consecutive 2 days, right? For the next consecutive 2 days, we failed to reclaim the 5-day moving average. Why is that a problem? A lot of people don't put a lot of stock in the 5-day moving average because it's not a big deal. I do. The reason why I do, the 5-day moving average for me represents short-term sentiment. So especially if you are an intraday trader or even an overnight trader of momentum scenarios, you need to understand which way the wind is blowing. So if the stock or the market can close above the 5-day moving average, that means the bulls are in control. The longer they stay under the 5-day moving average, that is a sign of concern. Now, why is that a sign of concern? Let's take a look at, again, remember, your eyeballs are the best test of technical analysis, okay? News on the surface is great, it's phenomenal, it's how the market perceives it. So again, if you look at the scenarios, right, just go back through the charts. Again, charts are very basic. They're not there to trick you. They're there for you to collect data. So if you look what happened here, right, it's the same scenario. The market was going up, right, and we closed 1 day, 2 day, 3 day, below the 5-day moving average, couldn't reclaim it, and look what happened next, right? Here's the same scenario. You had a blow off top, right? Look, it's the same thing. Here, blow off top, blow off top, blow off top, right? The next 3 days, below the 5-day moving average, the market went lower. So again, we started seeing the same thing play out. Again, the market is not trying to trick you. Guys, again, everybody puts all these different indicators and pitchforks and this, that. The market is not trying to trick you. It does the same thing over and over again. It methodically detaches you from your money because you're trying to get more thinking of being creative. It's the same orderly balance over and over again. So if it did it once, it did it twice, look how we're setting up again. we are 4 days now, right? We are 4 days now, right? 1, 2, 3, 4. We are 4 days now below the 5-day moving average. Here we have 1, 2, 3, 4, bloop. 1, 2, 3, 4, bloop. So we're 4 days below the before the 5-day moving average, and now we close below the 10. So if you are, again, if you've seen anything that I've put out there on the PS60 theory, or have participated in our bronze program, or just seen the 3-hour breakdown of the PS60 theory, my theory is the birth of the trade, right? The birth of the trade starts at the 10-day. That's the green. That's all this green stuff right here, right? This green line, right? These little lines that people say is so irrelevant. This green line here is the birth of the trade to the upside. So if you believe the birth of the trade to the upside on the 10-day, well, then you have to believe the 10-day will be the birth of the trade to the downside. And again, you guys remember that 167 level we talked about? It held here several times, okay? Any close going into this week, right? Any close going to this week below the 10-day moving average, we're gonna have a nice move down, okay? We're gonna have a nice move down. And if you look at all the stocks, right? If you look at all the stocks, NVIDIA, Netflix, right? Netflix, NVIDIA. Again, there's nothing there on the surface to turn around and say, oh my God, we're going lower. But again, the NASDAQ 100, okay, if it goes lower, well, these things are going to go lower as well. So it's very, very important, guys, just from the mental aspect, okay, from the mental aspect. Sometimes you don't need to be as creative thinking as you possibly can. When I say back testing, and I use that word a lot, all you need to do sometimes is go back a couple of months and look at the charts, just from a pure no bias point of view. Look at the charts. You'll see a lot of similarities on the macro point of view of what potentially can happen. So if you look at this is only going back to January. So if you look at January and you look at, for example, January, February, March, and you look at where it is now, you have two sets of scenarios that are playing out to see exactly what happens. So going into this week macro-wise, okay, we better hold that 167. Okay, if we don't hold that 167 on the close on the QQQs, we will go lower, and you can see the levels again. If you believe in the theory that stocks go from supply to supply, well, then things go to demand, to demand, to demand, to demand, so forth and so on. So just to kind of tie it all up here, especially if you're newer traders, you want to make sure the first thing you do before you start including all these fancy schmancy studies on your charts, let your eyeballs be the deciding factor. Okay, let the eyeballs be the deciding factor, because sometimes news on the surface is not what it's all about. There's a lot of hidden value on the other side of the trade, and that kind of segues into this week. This week was probably one of my better weeks. Okay, and the reason why it was probably one of my better weeks. There's really not a lot of mystery. Everybody knows my favorite stock to trade is Tesla, and the word is trade. Okay, whether it goes up, whether it goes down, doesn't make a difference. Again, for me, it's all about ranges. And yeah, a lot of the trades you can take are $1, $1.50, 75 cents, $2 in a tight macro range. But when the things go micro, okay, and there's a very specific range on the daily chart, and it starts getting confirmed, really good things are going to happen. So remember we just talked about like 3 minutes ago about how news on the surface is not as important as how they react to the stock. So let's talk about Tesla, right? Let's talk about Tesla. So if you guys remember, over the last several weeks, there's been a lot of really good news, quote unquote news, or at least headlines that came on Tesla stock. And everybody knows Tesla is probably the most loved and hated stock at the same time. Again, the Twitter Tesla feed is precious. I mean, it's like watching Curb Your Enthusiasm on loop. It's the funniest thing. We'll have one guy saying it's going 500 today, and the next guy's going to say it's going to 0 today. It's the most amazing thing. And this is why Tesla is such an emotional, wreck for a lot of traders. For me, it's the most amazing thing ever. And for the last especially for the last week, we don't even need to go back a couple of weeks. Let's review the data, right? Let's review the data. First of all, going back, let me just actually break it down. If you go back to the biggest runs on Tesla over the last several months, it came on really bad news. Goldman Sachs downgrades, nobody cares, the stock rallies. Production, I don't even follow a lot of these headlines. Production delays, blah, 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 nobody cares, the stock rallies. And then you start looking at the opposite side of the spectrum, right? So if a stock can't go up, guys, again, this is for basic technical analysis for new traders. If a stock can't go up, okay, on good news, what do you think is going to happen, right? Give it a second. Let it marinate for a second. So look at the headlines and look at the data. Look at the collection of data. Look at the clues, right, we've gotten over the last week. Number one, Elon Musk. Love you, Elon. Full disclosure. Elon Musk buys 30,000 shares, right? 30,000 shares, $10 million worth of stock, right? Which again, the guy's worth $1 gazillion. Does it really make a difference, $10 million? But again, on the surface, good stuff. So the stock goes up $3, $4 and they sell the stock, right? Is that bullish or bearish? Just asking. Then Nomura, right? Remember Nomura Securities? Last Friday, $500 price target, right? $500 price tag. Oh my God, the bears will never learn. The shorts are about to get squeezed. What happened? Stock went lower. The next day, right? The next day, well, actually a couple of days later, they talk about a reorganization, right? What does a reorg mean? For me, it means let's get rid of like kind of the middle management, right? Everybody knows Tesla's burning money, blah, 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 blah. Okay, everybody knows about that. But let's get rid of the guys in the middle. They're not saying that, but let's get rid of the guys in the middle. That's going to save salaries. That's going to save stock options, blah, 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 right? The stock gaps up and the stock goes lower. So you're getting all these data feeds, right? You're getting all these data feeds. You're collecting the data, you're processing the news, and everything that you're seeing is good, but the stock is selling off. So my mental, again, I'm not the smartest guy in the world, but I know if something can't go up, it must go, right? So now you're trying to apply news and market sentiment into technical analysis. And that's the name of the game, guys. It's all about technical analysis. And if you look at Tesla, and this is a 60-minute chart, right? This is a 60-minute chart on Tesla. If you look at the bottom of support, right? This is the bottom of demand on Tesla shares. You keep on seeing the 5.8 lows was 299, right? The 5.9 lows were 299.30, right? The 5.10 lows, right? 5.10 lows were right here, 299. So you're looking at this whole 299 area, right? So that's where technical analysis comes into play. And this is where you start to apply your process. Whatever the process is, whatever stock you're trading, you're starting to put the macro sentiment into a micro process. And you start playing on that process. So when it confirms, especially on a macro channel on daily charts, what happens? The ranges start to expand, right? The ranges start to expand. So if you notice, again, everything on technical analysis is very, very basic. And this is where I kind of put in, and obviously I traded this stock and I traded it twice throughout the week. And this turned out to be one of the biggest trades twice, collection of point-wise for the whole year for me. And if you notice when we started talking about the technical analysis, remember that 299 level, and that kind of correlated into the 10-day moving average. Remember what I said a couple of minutes ago? If the 10-day is the birth of the trade to the upside, the 10-day must be, the birth of the trade to the downside. So we talked about any close under the 10-day 299 is bearish. There's nothing about it. You can't hedge that. It's bearish. It kept on hitting that line several times, right? Kept on hitting that level several times. 299, 299, 299. There's bearish. There's nothing else to talk about. There's no, you can't dance around it. It's bearish. And once it started talking about, this is exactly how it played out. 298 intraflow is going to be important because it confirms off the 10-day. It's going to the downside. And then you have levels of 297, 295, and then aggressive all the way down to 275, right? Remember these levels, guys? This is pure technical analysis. This was done on the 14th. This was 6 days ago, right? Pure technical analysis. And we got short, off that 299 level. Initially, I made about 2.5 points on it because again, you can't look at the 275 until all these levels start breaking. So you start trading stocks from confirmation to confirmation to confirmation. So it started moving lower. So initially it took about 2.5 points on the trade and the stock bounced, right? And then slowly but surely the stock started trickling down throughout the day and started closing below the 297 level, and then it closed below the 295. And if you guys remember, it closed at 293. At 293, I think everybody in the live webinar pretty much got short overnight via options or via equity. I had the equity. I trade equity. I don't trade options. And then the next day, the stock gets downgraded. Right, the stock gets downgraded, and I cover the stock. I mean, I took about 2/3, about 7.5 points on 2/3, and then my last run I took about 10 on it. Okay, so I was very, very happy with the trade. But again, irrelevant of that is the channels, the technical analysis channels. So if you go 297, 295. And then where did we get the 275, right? Where do we get the 275? So if you look at what happened just from the 299 level, you start seeing all these different areas of interest being taken out, right? Slowly but surely, taken out little by little, little by little, little by little. And then we kind of fast forward till we are today, right? We kind of fast forward till we are today. All these levels got taken out. And where did I get the 275 from? 275 was the low, right? 275 was the low from 5.3. And look at Friday's low, went to 274. Friday was really, really good as well. I took Tesla. I took Tesla from the what did we take it from? We took it from the 280 and a half level. And the reason why 280 and a half was important, let me just show you guys real quick. The reason why 280 and a half was important because if you look at the low, right? If you look at the low from 515, the low was 280 and a half, and it broke all that, and again stopped at support. So if you look at our private, Twitter feed, right? If you look at our private Twitter feed from Friday, this was, by the way, a phenomenal pivot as well from Friday. Baidu 167 pivot went right down to 53. Here he goes right here. So I put this in the channel roughly around 10 o'clock. Recent lows 280 and a half. Watch the build, and this was a sneaky pivot off of that 281.80. Could flush it there, and obviously it did flush it there. It broke in, it went all the way down to 274. So that was a really, really good trade, absolutely good trade. And again, if you love technical analysis and you love the pure, and by the way, I still have a runner. I still have a runner from that 280 and a half level going into tomorrow. And I'm hoping if we can get that break below, 274, which is Friday's low. There's a legitimate chance for all you option players. There's a legitimate chance this thing gets down to this 244 level. I mean, look. There's nothing. It's all air. There's nothing here. There's all air here. So again, before you say no, it's impossible, right? Okay, just take a look. It's all technical analysis. It's there right in front of you. It's not trying to trick you. The charts are trying to tell you exactly what's what. So it's incredibly important, guys. For those who don't believe in technical analysis, trust me. You guys remember that? You guys remember that scene with Terry Hatcher? Guest starring on Seinfeld, when everybody was trying to figure out if her breasts were natural or they were fake, and she turns around to Jerry and says, "They're real and they're spectacular." That's what technical analysis is. It's real and it's spectacular. So for all you new traders who are first starting out, really dive into technical analysis. You can go online. There's so much free information about Japanese candlesticks and all that good stuff. But you have to set your foundation with technical analysis. I get the whole fundamental analysis versus technical, but again, I don't care if the stock goes to 0, if the stock goes to 500, as long as there's channels to make sure we get confirmations and we get our wind of our back. So going into this week, again, here where we are, guys. We're at the kind of a make it or break it. Again, remember the 167 level? This acted as supply, right? Now it acts as support. So any close, folks, any close this week below 167 on the NASDAQ 100, we're going lower. I mean, there's just nothing to say. And look at the charts. Just look at the charts on the video. Here's in the video. Look at the charts, how it's teetering on the 60-minute, right? Look at Netflix right here, how it's teetering on the 60-minute. So it's a very, very kind of, again, I don't want to say Armageddon do or die scenario, but we're here. Any close under 167, it could get very, very aggressive. So all you guys who are getting this email, obviously the watch list is below. I got some really good setups. Going into this week. Again, if you trade beta, okay, the Teslas, the Baidus, the Amazons, you should definitely check out our private Twitter feed. For 4 years, I've been giving these pivots out for free, and we just made a business decision. We made a business decision to make it private. It's only $20 a month, man. If you trade beta, it's only $20 a month. We put these things plenty of time for you guys to watch order flow, for all you guys to trade on the option side to kind of develop your strategy. and to make things whole, you can definitely benefit really, really well from it. For the rest of you guys who are joining us via the live webinar tomorrow, the link to the room goes out 8 a.m. Eastern time, and morning strategy starts up at 9. So guys, have a blessed week. Hope everybody does incredibly well. Keep learning, man. Keep learning, keep grinding, keep back testing. And the most important thing is stay solvent. Guys, have a great weekend. God bless, and I'll see you all tomorrow.